G'day guys, Seeney here, and welcome to another episode on the Australian Wealth channel. And in this episode, we are going to have a look at what my current property portfolio looks like. So thank you guys for watching. Please make sure that you like and subscribe. Really helps to get this information out to people that may potentially need it. Really helped me back in the early days. So we're going to talk about my current property portfolio, and maybe this can help you as to how you want to grow your property portfolio and see how these results can be achieved over time, because this has taken about 5 years currently. It's not something that's happened overnight, but the gains that we've had in the space of 5 years has been absolutely phenomenal. So I just wanted to talk about that so people can see the progression and what it looks like and how you can get from $0 to multi-millions. So we're going to start with the first property that I bought, and that was my primary place of residence. I bought that with my missus in 2019. So the land settled roughly October, November. So right near the end of 2019, right before the pandemic started. Now, a lot of people say you should be buying investments first, and financially that is probably good advice so that you can maintain your borrowing power for investments only and you can get more properties. But of course, life does get in the way, and that's something that we really wanted. So we bought this house for $819,000. So we're in a pretty significant amount of debt. We put 20% down for that one. Now, that was about 5 years ago, give or take a little bit. And then over the course of this period of time, that property has appreciated to $1.35 million. So there's a big gap there from what we paid for it to what it's worth now. Important thing to remember is that this is also tax-free, this particular purchase, because we bought it as our primary place of residence. So for this property, we have a gain of $531,000 so far, which is a significant uplift in value. The next one that we bought was in 2020, and this was in Queensland, our first investment property, in a place called Thornlands, and we bought this one for $549,000. And since 2020, that's appreciated quite significantly in Queensland to the point where it's now worth roughly $900,000. So that is a gain of $351,000, which is pretty good, So if we combine those two together, we're starting to get up towards the million mark in gains. So we'll continue to hold that one for a long time. The next one that we bought was a property in Adelaide. This was in a place called Manapara, and this particular property we bought for $415,000, which we thought was actually a really good deal at the time. And since then, in the last couple of years, we bought this in 2022, it has appreciated to $610,000 roughly based on comparable sales. So that is a pretty significant uplift, that one. So very happy with that. We're looking at roughly, I think, 200,000 in gains there, which is great. And then our final property at the moment is a townhouse in Springfield Lakes, which is also in Queensland. It's actually a brilliant property. Normally I wouldn't go for townhouses. I think houses are definitely the way to go if you're wanting capital growth. But the location of this particular property is fantastic. This is a waterfront, waterfront, lakefront property. There's cafes close, and it has every single amenity that you could ever want. There's a hospital, shopping center really close by, all the food options that you could ever want, basically everything that you need. So it seemed like a really good purchase, and so far it has been. So Springfield Lakes, that property we bought for $470,000, and that's since appreciated to roughly $600,000, which is a $130,000 gain. Pretty happy with those results. So the total uplift over the last 5 years has been pretty significant. Just in raw gains alone, we're looking at $1.2 million, which is a huge uplift just from holding these assets. So there's two ways you could look at this. Either the dollar's gone down in value or our properties have appreciated. I think it's probably a little bit of both. So to make that kind of money, you would need to have roughly $1.6 million in profits from a business or your wage, which for a lot of people is just totally unattainable. It's just not something that you can do unless your business is really successful. So, for a lot of people, property is the best way to grow your wealth. And the best part is, and if you don't sell, it's totally untaxed as well. So a lot of people say that debt is really dangerous, but it's actually built in quite a significant buffer for us now, to the point where, if we ever run into any dramas financially, I have the ability to sell off some of these properties for a very significant gain, and that provides us with a huge safety net. So by taking out this debt, it's actually improved our financial situation quite significantly. So, whilst there can be a little bit of risk attached to debt, especially in the beginning, if you can ride that out and get on top of that, it builds in quite a significant buffer. And we have $2 million in debt. So things are looking pretty good on the property side. So obviously this is a process that has taken time. It's not something that's happened overnight. And anyone that's looking to build a property portfolio needs to look at it the same way. This is going to take time. It's not saying it's going to happen overnight, but as long as you're taking actionable steps towards your goals and doing the things that you need to do, then you're going to achieve fantastic results. See, things have changed a little bit more for me now, because if I want to continue to grow this portfolio, we're pretty capped on serviceability after having four properties so far. So what we're looking to do is move into the commercial space, and we're going to start doing what's called lease doc loans, where loans are doled out based on the strength of the tenants. So a lease doc loan requires a little bit more of a deposit. You're looking at like 30 to 35%. But the great thing with that is it doesn't really matter about my financials, it matters about the tenant financials. So obviously you're looking for an investment property that's tenanted. So we're going to be moving into that, because the game of finance is a really fun one. So based on what we have at the moment, my portfolio is currently growing at roughly $250,000 a year. So property appreciates roughly 7% a year, which means it doubles roughly around every 10 years. So if I do nothing, this portfolio will appreciate at $250,000, then a little bit more than that the next year, and a little bit more, and a little bit more, etc., etc. So this is assuming that I don't buy anything else. I just have the 4 properties that I currently have. So in 5 years' time, this portfolio is going to be worth about $5 million. In 10 years' time, this portfolio is going to be worth about $7 million. In 20 years' time, so I'm currently 31, 32, I don't even know, can't remember. So by the time I'm 51, 52 years old, this portfolio is going to be worth $14 million, give or take a little bit. And the big one, after 30 years, so by the time I'm 60 years old, this portfolio is going to be worth $28.4 million, which is going to put me in the category where we'll be considered an ultra high net worth family. So whether that's the case or not, who really knows? Because, the bar might change as the dollar gets eroded away. But that's assuming I don't buy any more properties. I'm going to continue to do that to accelerate that process. And of course, there's a lot you can do when you have a portfolio that's that large. Property is obviously a growth asset. So over time, sometimes it can be good to sell off a few of those properties, obviously cop the capital gains hit that accompanies that, and then move it into another asset class, which then will throw off more money. Because property is great for growth, not so much for cash flow. There's certainly better options out there. So that's basically the story of my property portfolio over the last 4 or 5 years. And obviously it's been an interesting period of time. There's been some insane growth, but also there's been some very quality buying. There's people out there that have had terrible outcomes when it comes to property investment because they didn't buy the right stuff. And that's critical, because there's not only the fact that you might lose money on that, but there's also the fact that there's an opportunity cost, where if you didn't buy a great asset, then you're missing out on a lot of the gains that go along with that as well. So I hope you guys found this enjoyable. If you have any questions about my portfolio, I'd be more than happy to chat about it and how we can grow a property portfolio for you. So please make sure you like and subscribe. Really appreciate you guys watching. It is possible to build a large property portfolio. It just takes time and energy. You need to constantly be moving in the right direction, take a little bit of risk, and fortune favors the brave. So thank you so much for watching. My name is Seeney, and we'll see you later.